Good morning, friends. Welcome to weekly view on markets. Markets continued consolidation during this week also. Nifty traded in a band of 500 points. There was weakness in the first 2 days of the week, and all these losses were recouped on Thursday and Friday. Technical charts indicate more consolidation in the markets. So, what triggered the rally on Thursday and Friday? Sharp fall in crude prices, good macroeconomic data which has come out in the first week of October has given confidence to the markets. There was a RBI Monetary Policy Committee meeting in which interest rates were not raised. So, on the backdrop of these developments, market went up and recouped all the losses for the week. Now there is a development at the weekend. Israel has declared a war against the Hamas militants. So markets will react to these news on Monday, and also second quarter results will start coming with the TCS declaring its result on 11th October. So these all events are going to guide the market in the next week. Now let us look at weekly performances of the markets. Nifty index closed at 19,653 with a gain of just 16 points. Bank Nifty lost about 223 points, lost around 0.50%, closed at 44,360. Mid-cap index lost around 252 points, closed at 40,284. Small cap index gained about 88 points, closed at 12,837. India VIX, that is volatility index, is at 10.30. Now let us look at how different sectors have performed during the week. Realty sector has gained around 2.06%. Consumer durables, information technology, media sector, service sector all gained 0.8 to 1%. So equally, there were other sectors losing this, during this week. Energy sector lost around 2.16%. Commodity sectors lost around 2.62%. PSU stocks lost about 1.64%. Pharma and healthcare lost about 1.95%. Auto sector lost around 1.20%. Remaining all sectors were ended up with small losses. On the whole, different sectors also were consolidating during this week. Now let us look at technical charts. This is the daily chart of Nifty index. I have drawn two lines. This is the one support line. Nifty has a good support at around 19,300 levels. And another support line I have drawn connecting two bottoms. And if we see Nifty has just fallen below this support line for one day, and after that it has pulled back. And if we look at the full chart structure, Nifty chart is making higher tops. So this gives an indication that there is a strength in the chart and you may not see big fall. If any big fall is there due to some global events like Israel war or anything, that will be a good buying opportunity. This is the Nifty mid cap index chart. I had predicted in the earlier week that mid cap index is likely to go in for a consolidation. So we are seeing a typical consolidation pattern in the Nifty mid cap index, and this consolidation may continue. This is the chart of Nifty small cap index. Here also we find the consolidation pattern in the small cap index, and this consolidation pattern is likely to continue for some more time. This is the chart of Bank Nifty index. Clearly, it has set a range of from around 44,000 on lower side and 46,200 on the side. And whenever it is dropping to the support levels, traders can buy Bank Nifty index. And whenever it reaches around 46,000 levels, they can sell. So unless Bank Nifty breaks out of this pattern on either side, it will continue to trade in this zone. Any breakout above 46,000 will give a good rally in the Bank Nifty index. As fundamentals of banking sector remain strong, I don't see any possibility of Bank Nifty breaking down below 44,000 or 43,800. If any breakdown is there, that will be a good buying opportunity. Now let us look at macroeconomic fundamentals of the market. Lot of data from macroeconomic front is coming during the first week of month. Auto sales for September 23 have been good. Companies are expecting good sales in the coming festival season. Since rural economy is yet to pick up, the two-wheeler sales generally, the two-wheeler sales are higher in the tier 2, tier 3 cities and rural areas. So the demand in rural sector continues to be weak, followed by the weak monsoon. So the rural demand is yet to pick up. Otherwise, especially SUV sales of auto industry is very good. It is expected to be better in the coming months. RBI dollar reserves is quite stable. It is at 598.8 billion US dollars. INR USD rate is at 83.25. Dollar index is inching higher. It is at 106.23. The rupee is falling because of the global demand for dollars. So rupee is going down along with all other currencies with respect to the dollar. This is indicated by the dollar index. There is no problem with the RBI reserves, that is forex reserves, or the macroeconomic data in India. The rupee is reacting to the global demand for the dollars. Gold price is dropping and it is at 56,898 or 10 grams 24. Crude price after touching a high of $96 per barrel 2 weeks ago has seen sharp fall and crude price is at $84.43 per barrel. So the sharp drop in crude price is good for Indian economy. It will help in bringing down inflation, bringing down oil prices, and also it will improve our forex reserves. But oil marketing companies are facing under recoveries. So marketing companies have started incurring some losses on petrol and diesel. FIIs have sold 8,412 crores during this week. FIIs continue to sell as US dollar bond yields have gone more than 4%. So that is the reason FIIs are selling from the emerging markets and investing in US bonds. DIS have bought 8,435 crore in equity during this week. So FII selling is more or less matched by DII buying, and domestic institutions are showing more interest in buying at lower levels. They look at Indian macroeconomic data and they have confidence about the future growth in earnings and growth in the economy. That is why DIIs are investing. That is the reason I am saying any sharp fall due to any global reason in the markets is a good opportunity for buying. PMI manufacturing index has come at 57.5 and services PMI has come at 61. So there is slight drop in manufacturing PMI compared to previous month, but still 57.5 is considered to be a good expansion in industrial growth. Services PMI is at 13-year high figure. This has improved from 60.1 to 61 over previous month. So this shows a strong growth in services sector in India, that is hotel industry, tours and travels. RBI did not raise interest rates during this monetary policy committee meeting held in this week. RBI has forecasted full year GDP growth at 6.5%. India will be one of the highest growth major economy in the world, and inflation estimate is at 5.6%, which is below the RBI target band of 6%. But still, RBI has told that they will wait and watch and they will take steps to control inflation, which is a hawkish statement. So market is happy that interest rates have not gone up, but market is also not expecting any rate cut in the near future. There was a GST council meeting on Saturday, and government has reduced GST on millets from 18% to 5%. This will have a good impact on millets, which will help to bring down inflation. We see buying interest by DIIs at lower levels. The concern from deficit rainfall continues. This may hurt agriculture sector and the rural economy. This is a red flag for the markets. Second quarter results will set the tone for the markets. If the results that are coming out are good, the market will be happy and we'll see higher levels in the market. Analysts are hoping that second quarter results should give a growth of more than 16% year on year. We'll have to wait and watch for the results. The biggest development is Hamas militants in West Bank Gaza Strip have attacked Israel with more than 2,000 missile strikes. Israel has officially declared a war against these militant Hamas in the West Bank Strip. So this war situation was at the weekend on Saturday. The development was on Saturday and Sunday. Markets will react to this on Monday. How the markets will take this war-like situation, we'll have to wait and watch whether market will see it as a local development and take it in the stride, or whether markets will react like what happened during Russia-Ukraine war. This we have to wait and watch. So investors need not to panic. They should have faith in Indian systems and Indian economy. Internally, our economy is quite strong. The fundamentals of the economy are improving. good growth is expected in GDP. So investors should stay. They should not worry about temporary volatility. But traders have to be careful. There could be huge swings in the market based on global developments. So this is all for this week. If you like my video, please subscribe to my channel, share with your friends. You can give your comments. And if any questions are there, I will reply. We'll meet again next week. Thank you.